Hello guys, TPG Investing here, back with another video. Today I want to talk to you about a company that was recently brought to my attention. This came about from a comment on one of my videos, asking me what I thought about the current semiconductor shortage, and then I was sent some information about the company which I really like the look of. The company I want to talk to you today about is Atomera Incorporated, Nasdaq ticker ATOM. Over the past 12 months, this stock has risen from approximately $3 up to a height of over $46, and now sits at nearly half that, just under $23. Before we get into the video, if you like the content, it would be greatly appreciated if you could smash that like button. It takes a lot of time to research these companies and make these videos. Hitting that like button would help it be seen by more people. We're aiming for 50 likes in this video, let's make it happen. Subscribe to the channel if you're new and hit that bell notification so you never miss one of my videos that could potentially make you money. Make sure you watch the entire video and don't enter into any stock blindly without viewing all the information on offer. And leave a comment down below, I'm interested to hear what you think of the company. I want to point out that I'm not a financial advisor, this is not financial advice. At the time of this recording I do not hold a position in this company, but that could change in the coming weeks. Finally, I encourage everyone to do their own research if thinking about investing. Now let's get into it. Atomera Incorporated is a semiconductor materials and intellectual property licensing company focused on deploying its technology into the $450 billion semiconductor industry. The company was founded in 2001 by Robert Mears with the vision to develop a platform of materials technologies for use across multiple industries. In response to the slowdown in the advancement of Moore's law, Atomera used atomic level material science to develop MST, Mears silicon technology, which provides multiple benefits to industry participants. For semiconductor designers, MST improves performance and power efficiency while potentially reducing cost. For semiconductor fabs, the technology allows them to extend the life of their expensive manufacturing facilities by providing a new, unexpected suite of material improvements with existing process nodes. After several years of research to perfect the technology, Atomera is now engaged with leading semiconductor companies to integrate MST into their manufacturing flow. On August 5, 2016, Atomera completed an IPO and trades on the Nasdaq stock exchange under the ticker symbol ATOM. So why is Atomera's technology so important? For anyone who is unaware of the importance of the semiconductor shortage, it's a huge issue. So let's talk a bit about that and see why Atomera's technology is so important. Consumers are facing price rises and shortages of products from TVs and mobile phones to cars and games consoles as a global shortage in semiconductors grows. The shortage in chips within every electronic device in the world has been steadily worsening since last year. At first the problem was only a temporary delay in supplies as factories shut down when the pandemic hit, but a surge in demand means that we now have a crisis. Car manufacturers investing in tech-heavy electric vehicles, the boom in sales of TVs and home computers, and the launch of new games consoles and 5G-enabled mobile phones have all driven demand. Even Apple, the world's biggest buyer of semiconductors, spending $58 billion annually, was forced to delay the launch of its iPhone 12 by 2 months last year due to the shortage. Ford, Volkswagen and General Motors are among car manufacturers that have been forced to cut back on production due to shortages. Ford recently said the profits could be hit by up to $2.5 billion this year, and General Motors said it could face a $2 billion hit to profit. Swedish auto giant Volvo announced that it is forced to halt its truck production due to a global shortage of semiconductors. The world's second largest producer of heavy goods vehicles will implement stop days across its global truck manufacturing operations in the second quarter. Last month, Sony, which along with other console makers has struggled with stock shortages over the last year, said it might not hit sales targets for the new PS5 this year because of the semiconductor supply issue. Microsoft's Xbox has said it forecasts supply issues continuing at least until the second half of the year. What's really incredible is that Samsung said earlier this month that the company might have to postpone the launch of its high-end smartphones due to the shortage. The fact that Samsung are not only the world's second largest buyer of chips, but are also the world's second largest producer of chips, consuming 36 billion of them themselves, says everything about the problem. This is where Atomera's technology comes into play. The MST technology is used to enhance semiconductors, reduce power consumption, improve performance, and reduce manufacturing costs for wafer manufacturers and the electronic device designers. Atomera is currently engaged with over 50% of the world's top semiconductor makers. They have licenses with 4 companies, including a recent JDA, which we'll talk about later. As you can see here, Atomera has got partnerships and potential partnerships with a broad range of companies across different sectors. The 2 that catch my attention straight away are Intel and Samsung, who we mentioned a moment ago produce over $50 billion of chips every year. As we can see from this chart, the company is at various different phases with each customer. However, it is worth noting that a high number of customers are now at phase 3 and 1 customer has gone to phase 4. We'll look at this as well in a few moments. So there's approximately 370 wafer fabs operating worldwide, and MST's deployment in wafer fabs is low cost. Using equipment already employed by many in the semiconductor industry, and without the need for exotic new materials. The adoption of MST in just 1 fab could make Atomera profitable from royalties alone. That's just 1 fab. In summary, they have high margin, recurring revenue financial model. I just love to see recurring revenue. It's incredible the amount of potential this company has. They have strong technology with loads of patents and a strong balance sheet. And they have traction with many top industry players and a growing licensee base. So let's talk about the team. Dr. Robert Myers, CTO and founder, is a recognized pioneer and leading expert in photonics and nanoscale material engineering with over 30 years experience. In the mid-1980s, Dr. Myers invented and was first to demonstrate the EDFA, a transformative technology for broadband networks. In 2001, he founded Mears Technology and as CTO led the invention and development of Mears Silicon technology. Dr. Mears has authored approximately 250 publications and patents. He holds a BA and MA degrees in physics from the University of Oxford, a PhD in electronics and computer science from the University of Southampton, and is an Emeritus Fellow of Pembroke College, Cambridge, England. Scott Bebaud is President and CEO. He has served as President, CEO and Director since October 2015. Mr. Bebaud has over 25 years of experience in the semiconductor industry. He has successfully built a number of businesses in his career which grew to generate over $1 billion in revenue at some of the world's largest semiconductor companies. Most recently, he was Senior Vice President and General Manager at Altera. He was responsible for strategy, organization, financial and marketing decisions at the company's communication and broadband division, which represented 60% of the company's revenue. Prior to that, he was the Executive Vice President and General Manager of the mobile gaming platform group at Broadcom. Mr. Bebaud holds a BS degree in electrical engineering and an MBA from Harvard Business School. He has a lifetime of experience in this industry. The rest of the team are vastly experienced and have also held various prominent roles across a number of Fortune 500 companies, including Frank Laurencio, who holds a BA Classics from Princeton University and a JD from New York University. So when we look here at the 6-month chart, we can see that right up until December the stock had been moving sideways as demonstrated here. Then in December it slowly started to rise from about $9.50 up to $16 at the start of January. Then rapidly started rising over the next few weeks before hitting a peak of nearly $50 on the 8th of February. As we can see, during that period it was pretty volatile, going up to $26, down to $23 before eventually going up to $47. It's at this point that the market correction began. And like some of the other companies that I've talked about, technology was hit harder than most, and the company began to drop like a stone. As we can see, the stock was highly volatile during this downward movement, often hitting the level of support and resistance in this channel. After the stock hit its lowest point of around $19, it bounced back about 20%. And as we can see here from this graph, for the past 2 weeks the stock has been moving in a sideways channel. As well as being a great long-term play, in my opinion, I believe that there's an opportunity to swing trade here because the stock keeps bouncing between its levels of support around $24 and its level of resistance around $28, which, if this was to continue, would offer the chance to make somewhere between 10 to 15% on each swing trade. Now, from my point of view, probably because of my own experiences, the balance sheet is one of the most important considerations when I look at any stock to purchase. It doesn't matter how much potential a company has, how many patents they have, or even how much revenue they are currently generating. If they have negative working capital or are loaded with unserviceable debt, it should wave a big red flag as to their ability to even continue as a going concern. So what does Atomera's financial position look like? When we look at the financial statements, we can see that they have total assets of over $39 million and total liabilities of over $2 million, giving them an asset to liability ratio of about 20 to 1. This is absolutely phenomenal. It's rare to see a balance sheet where the assets outweigh the liabilities to such an extent, especially with a company that's in its development stage and hasn't really started to gain revenue yet. So as part of the assets, we can see that over 90% is in cash and cash equivalents. And from a liquidity point of view, this is absolutely fantastic. And this is to be expected because the company recently did a successful share offering. We'll talk a bit more about that in a moment. When we look at the income statement, you can see here that they only had revenue of $62,000 in 2020. This is only a fraction of the 2019 figure, and they have encouraged a significant loss in both years. Operating expenses are extremely high, but with the company still in its development stage, you would expect to see high costs like these for research and development before seeing any significant revenue. Overall, when you look at the amount of cash and cash equivalents and compare that with their cash burn from operating, they do have enough cash for the next 24 months at least. Although I do expect that the selling and marketing expense will rise. As I mentioned a moment ago, the company has recently completed an equity offering on the 5th of January, bringing in nearly $25 million. They also completed an equity offering back in May of last year, which brought in approximately $10 million when the common stock was at $5 a share. The current price is closer to $25 a share. None of this should come as a surprise because the company had said in last year's annual report that they had expected to do this. With regards to their revenue, in the 2019 annual report, they also stated that they had expected their business would be affected by the pandemic. In the 2020 annual report from February, management have made the same statement regarding financing and pandemic. However, they have stated they have sufficient capital to fund the business plans over at least the 12 months following the date of the annual report, so I don't expect there to be another share offering in the near future. So this leads us into some juicy news. On the 2nd of March, Atomera announced it has advanced its previously announced JDA customer to the 4th phase of its customer engagement process, indicating that Atomera has delivered its MST IP transfer package in accordance with the GDA contract. With this advancement, the GDA customer became the first Atomera customer to enter the 4th phase of the 6-phase engagement process, which culminates in commercialization of MST-enabled wafers. Atomera currently has 25 engagements in its customer pipeline, consisting of 9 in Phase 1, 15 in Phase 3, and 1 in Phase 4. This is huge news as it shows that they're getting this far, the technology is likely to be successful. Just to be clear, this Stage 4 is the customer's installation of the MST technology. This installation will bring around integration licenses, manufacturing licenses, and distribution licenses, which in turn means a revenue stream. And as an investor, what do we love to see in any company? I've said it plenty of times on this channel already. It's recurring revenue. And that's exactly what Atomera will have. So guys, that brings us to the end of the video. I hope you enjoyed it. Please drop a like if you did. It really helps the video get out there and be seen by more people. If you've watched all the way through, then fair play. This video is longer than most of my previous videos, and believe me, this took a lot longer than most of my videos too. I hope that I've shared some information with you that you weren't already aware of, and I hope you found value in this video. If you're new to the channel, hit that subscribe button and bell notification. So what do I think? I really like this company. I like their technology, and I think it really solves a long-standing problem that has been growing and growing for over a decade. At the moment and over the next few months, the shortage of semiconductors will become very apparent to pretty much everyone. I think most people will have noticed some of the issues already arising. Certainly anybody who wanted to buy a new Xbox or PS5 or any high-end components for a PC, such as an RTX 3080, will have noticed the absolute crazy shortage in the market. My only issue at the moment is that the technology hasn't been fully integrated by any of its customers, with only one customer so far getting to stage 4. However, there are a lot of customers at early stages, and it would be expected they will also get to this stage. It might be some time before any major revenues start to flow into this company, but there should be a long enough cash runway to sustain this. I'm also putting a link in the description to a report on WordPress that was sent to me by a fellow Stocktwits user. It will be interesting to see the next quarterly results and keep track of their cash burn and any revenues that are recognised from that stage 4 customer. I think they have a very bright future, and it's just a matter of time. It's just a matter of how much time before they start seeing the revenue inflow. As always guys, this is just my opinion, and if anyone is thinking about investing into this company, I encourage you to do your own research. As I said before, I'm not a financial advisor and this is not financial advice. Thanks for watching the video. What are your thoughts on the future of Atomera? Leave a comment down below, I'm interested to hear what you think. Catch you in the next one.